G'day guys, welcome back to Pete's Investing. I occasionally do a review of a share price, and we had Salesforce announce its results, and they've had a really nice result financially, and because of their development of AI technology. I'm not going to get into the fundamentals, I focus more on the technicals, and this is the CRM Salesforce chart review. So you can see here we've got the weekly and the daily. So this is very similar to my daily reviews of nat gas, gold and the US market, etc. Same sort of analysis. So what we've got here is the CCI 150 primarily we're looking at in terms of a trend and also a divergence indicator. So we've got the CRM CCI 150 on the weekly and also on the daily. So first off, I want you to notice a couple of things in terms of divergence on the weekly. If I blow that up, you can see here we have similar to what we do every day. We've got a bearish divergence versus a bullish movement on the price, and it fell off, and it actually hit our, if I drew a Fibonacci between that low and that high, hit our 23-38% level before bouncing up from there. That was one successful point there. There's another one here, bearish divergence there. See here the price fell off. There was no divergence in that period there until we get to that point there. We have a new high on the price chart versus a new low, a lower high on the CRM, on the CCI 150. And that's a bearish divergence versus the price, and it eventually then dropped off more than almost 100% of that Fibonacci range. So always pay attention to these divergence. You can see there currently we're moving up, breaking above the moving average. The CCI moving averages of the CCI 150, and that's a CCI, the moving average 40 on that one. So again, a nice big bullish candle this week. On the daily, similar sort of results. Again, I'm not going to go too far back, but you can, if you look closely enough, you'll find divergence. And the most recent divergence, we had a bearish divergence here versus the price, and it fell off. And again, I've kept that Fibonacci in there, and it's hit the 23. That should have been down there to the 38% level. You can see there it hit that level, then it bounced up from there, and it's rebounded down and just broken just below the, actually bounced off that 38% level again before making new highs. Now, the way to trade this and to enter the trade to buy, what we do is we look at, if we go back to the weekly here for a moment, so let's go back to 2017. So you can see there when the CCI breaks above that moving average 40, it breaks above it, and you'll notice the 2017 equivalent back to there. You can see there on the right side on the daily chart, that's also in an up move. So theoretically, you can go long during that period when it weekly breaks above the moving average. You'd go long somewhere in there, and probably take your profits when the CCI breaks below the moving average there. So yes, the price did go up further from there. You can actually probably again enter that, so long as the weekly is in an uptrend, probably enter it again there. Now you probably want to average down. I like to average down, I don't use stop losses. So average down and enter more possibly there, or just hold on to that position. You can see there the price kept going up. So if you're not in a position, you'd enter another position there. Again, exit the trade. If you're in a profit and the CCI breaks below the moving average, you'd exit the trade. So that's pretty much the way you trade using the weekly and the daily. And more recently, you can see there it broke above the moving average at that point there. So you'd enter the trade on the daily. You can see there when on the weekly and the daily are above their moving averages respectively. You go long, and you'd exit the trade when it breaks below the moving average there. And that would have been a nice little area to get out of it with a little bit of a profit. Yes, the price did go up, but again, if you're going to hold it, you'd make sure that was giving you the first indication of a, if I zoom in, let me just zoom into that one. So you can see there, I'll draw another different color between that point and that point. You can see there was a lower high on the CCI versus between that point and that point. That was your first opportunity to get out of the trade with a bearish divergence. And then it just extended from there to that more recent high and to that more recent lower high there. You can see there the price then fell off eventually, and that's where the divergence eventually fell off and closed out with a small retrace to the downside. So again, if you're in back here, you would have probably gone long. Let's go back. So that's the weekly's in an uptrend above its moving average, and that would have been an ideal spot to go long again during that point there, and you would have been in a trade there currently. So again, you can take a couple of exit strategies. I like to take 3 to 5% gains. or you can use the CCI breaking below their moving average. So there's a bit of give and take in some of those approaches, but it's really what your risk tolerance is and what your strategy outcome is. To get more ideas on how to trade using some of these approaches, I do a weekly review and update with some scans of stocks that are ready to break above fresh entries on the weekly and daily, and they happen on every weekend. So if you want to get subscribed to that opportunity, go to the Patreon page, links in the description below. Thanks for watching, and see you in the next video.